How many bank accounts should you have as an Amazon seller? What about credit cards? At the end of the day, how do you keep profit first? We're going to talk about this and more on today's episode. How cool is that? Pretty cool, I think. As FBA business owners, we've put thousands of hours of hard work into growing our businesses. But what happens when you've grown the business as much as you can and don't have the time or resources to take it to that next level? Enter Thrasio. Thrasio has acquired over 125 Amazon businesses from owners just like you. With more than 600 experts at the top of their field in brand management, growth marketing, creative, and supply chain, Thrasio's operating team can grow your business exponentially. Once you've sold your business, simply celebrate a lucrative exit and watch your personal wealth grow while your brand flourishes in Thrasio's portfolio. To connect with Thrasio's deal team, visit thrasio.com/helium10. That's THRASIO.com/helium10 for more information on if your brand is a good fit for Thrasio. Hello, everybody, and welcome to another episode of the Serious Sellers Podcast by Helium 10. I am your host, Bradley Sutton, and this is the show that's a completely BS-free, unscripted, and unrehearsed organic conversation about serious strategies for serious sellers of any level in the Amazon, Walmart, or e-commerce world. And we've got another one of our guests here who was a featured instructor in our recent release of Freedom Ticket 3.0. And she's going to talk about a subject that, sometimes we don't, it's not one of the sexy aspects of Amazon, like, where am I ranking on my keywords, or how can I get the best PPC strategy? But it's a very important topic about profit, which at the end of the day, guys, guess what? Sexy or not, that is, you got to be in this game for profit, guys. So this is very important. We're gonna go over some of the strategies. We're not going to give the entire module and Freedom Ticket away, but just something to whet your appetite so you guys can go in there and check it out. So Cyndi, welcome to the show. How's it going?
Hey, Bradley. Thank you. It's going good. So glad to be here.
Where are you located?
I'm in the middle of nowhere, Arkansas.
In the middle of nowhere, Arkansas. Are you a Razorback?
I am not. I'm a Wolfpack from North Carolina State University. So
okay. All right. So how long you been in Arkansas?
Probably about 16 years. Moved here with my husband's job and fell in love with it. We're in the Ozark Mountains, and it's just a beautiful, beautiful area.
Okay, cool. How did you get into the e-commerce space? Like, I don't know almost anything about you. Have you ever sold yourself on Amazon, or how did you get connected in this space?
No, I have a Shopify store now where we sell some of our financial products, but I got into the space because my daughter, I was homeschooling her. She had some learning disabilities, and I needed something to do to generate a little income and to be able to help with all of her tutoring. And I come from a corporate background in finance, and at that time, it was about 2014, the cloud accounting world was just starting to open up, and I'm like, I can do this from home and be with my daughter and make a little money. So I started just a traditional accounting firm and had local clients. But I read Mike McAllowett's Profit First, the first edition that came out in 2014. And I'm like, this is the problem. This solves the problem that I'm seeing with my clients. So I started training with Mike. And one of his very first pieces of advice to me was, you need to concentrate on a niche. And I had a few e-commerce clients, and I liked the flexibility that they had. They weren't looking for me to pop into their store and pick up receipts. We did everything electronically. And I just felt like it was a good fit for what I was trying to do, to create that flexibility in my life, and also kind of dovetail with what they were trying to accomplish.
Okay, cool. I think, like I said, this is something that it doesn't really matter what level of seller somebody is. It doesn't matter what your business model is in e-commerce. I'm a wholesale seller. I'm a drop shipping seller. I'm a private label seller. I sell on Walmart. I sell on Amazon. I sell on Shopify. At the end of the day, unless you're just doing this for fun, and even if you're doing it for fun, you can run out of money. You've got to keep in mind your profit. And I think everybody understands, hey, profit is first, but profit first is not just two words. It's actually kind of like this program, that you're talking about. So let's just say, in general, just to like, help people understand. I think they understand the general concept of profit. Like, hey, if I, whatever money I invested, if I'm making a profit off, if I end up with more than I put in, I'm making a profit, and if I don't, I'm losing money. But this concept goes a little bit beyond just that, right?
It does, because, you can make a profit on paper, but at the end of the day, it's how much money you have in your bank account. And so what Profit First as a cash flow management strategy is it's a way to use bank accounts to give you visibility into how your money is coming in and what you're using it for. And once you have that visibility just straight from your bank dashboard, you get so much real-time data that you're better able to make decisions on a day-by-day basis without all the accounting reports, which we love to do. But let's face it, they're hindsight. If you can look at your bank account and know how much money you have set aside for inventory, how much money you have set aside for your taxes, and you know that kind of real time, you're in a much better position to make good decisions and to not get yourself in trouble of overextending yourself on fun, distracting things that are nice to have. But at the end of the day, if you invest in those things, they're gonna take your money away from the next payment for inventory, et cetera.
Agree. All right. So let's just dive a little bit into how it is different than just, all right, here's my expenses and here's how much money I have left over. Let's just say I'm a brand new Amazon seller. I want to, get on the right foot here to start, understanding what numbers I need to look at to really know, am I putting this profit first? So what kind of procedures or things should I get in place from day one to get started on the right foot?
Okay, here's what I would do. This is what I tell for our first-time new clients, first-time seller type clients. First of all, you want to separate your bank accounts, and I recommend having 3 to get started. Most businesses start with one bank account and everything goes in it. And to me, that's kind of like looking into a pot of vegetable soup. You don't know how many potatoes went in there, how many carrots, how many beans. You can't really tell, right? So when you do that with your bank account, you don't know how many of those dollars really need to be earmarked for buying your next round of inventory to replenish what you're selling. You don't know what your tax bill is going to be and how much money you're going to have to pay on April 15th. So by having 3 bank accounts, that's where I like for people to start. One is to have your regular business bank account where everything comes in, but then create a separate bank account for your inventory. And so when you get your deposit from Amazon, what you will do, or Walmart, wherever you're selling from, when you get your money in, take the funds that you get in and pull out the replenishment cost for inventory. So if you get $10,000 in from Amazon, and $3,000 of that was for the cost of those goods that you just sold, pull that $3,000 out and put it into a bank account called inventory, so that when you have to place your next inventory order, the funds are sitting there for you to make that purchase. And then the other bank account that I recommend from the very beginning is a profit account. After you've taken that $10,000 and moved $3,000 over to inventory, you're going to be left with $7,000. Move 1% of that over to your profit account. And what that's doing is it's starting from the very beginning to build you up a rainy day fund, because things happen. Our inventory gets lost, or we get suspended. Things that are out of our control, we need to have a little bit of cash sitting there in our rainy day fund. So the funds are building up in that profit account, and every quarter, what you do is you take half of that out and you reward yourself for being a business owner, for taking a risk. Maybe you take your family out because they haven't seen much of you, because you had your nose in a computer trying to figure out your advertising, right? So you take your family out, you do something fun to reward yourself for being a business owner. The other half you leave in there to just build up to be that rainy day fund for when some inevitable situation happens.
Okay. Makes sense. Personally, I haven't done that, so I might have to take a look at the way I'm doing things here. Now, what if somebody doesn't need the rainy day fund and it just keeps building up, or like, at what point can I pull money out of there, or am I using that at all to like give myself a bonus at the end of the year or something like that?
Well, every quarter you're going to take half of it out. So it's kind of like this investing in stocks. And as a owner in a company, you get the dividend every quarter. So you'll be taking half of it out every quarter to do something for yourself. But as that rainy day fund builds up and you realize you've got enough funds sitting there to cover an immediate emergency, maybe it would cover one shipment from your supplier, or cover you for a couple of weeks of your payout. When you feel like you've got your rainy day covered, then you can use that money for other aspects of your business. Like maybe you're wanting to, if you're a new business and you're feeling like you're overwhelmed with things, one of the questions I get asked a lot is, when can I hire somebody? Well, as those funds start to grow, you can look at it and say, okay, I have this excess funds here. I can use that to start to hire a VA to help me. Or maybe you want to hire a bookkeeper at that point, So, so they build up. You can either put them back into use for something in the business, or you can take it out as a bonus at year end if that's if your business is operating fine and you don't need it in the business.
Interesting. Now, some of this ties into something I had never heard about until you mentioned it in your Freedom Ticket module. But can you explain about the Parkinson's Law thing there?
Parkinson's Law basically says you use what you've got. So in the example I really like to use is toothpaste. And back before COVID, when I was traveling all the time, I would have this little tiny tube of toothpaste that the dentist gave me. And if I was going to be gone for a couple of weeks, I'd use just a little dab of that toothpaste because, why would I pack a whole tube of toothpaste? But if I'm at home, I've got the big tube of toothpaste, you put a whole lot of toothpaste on your toothbrush. The idea is when resources are scarce, we use them more carefully than we would if there were a plentiful amount of something. When something is plentiful, we let our imagination kind of run wild and we start figuring out, what can we do? So if you have only one bank account, like that big pot of soup, and everything's in there and it looks really full, that you wake up in the morning, you check your bank account, man, I got a lot of money in here. Then you start thinking about, maybe it's time I could get that new computer I wanted, or maybe I give myself a raise, without really thinking through, I'm going to have to pay out for my inventory next month, and that's going to hit me for $50,000 or whatever it is.
Yeah.
Because everything's all in there, we start using it as if it were plentiful, like that big tube of toothpaste. Just by separating your money into smaller buckets with an intended purpose for that money, just by separating it, we can see how much we really have. So if you're setting aside that money in your inventory bucket and you have to buy inventory every 2 weeks, you start to get a sense of that cash flow for inventory. Cash flow for inventory really flows very different by every business. I mean, it depends on whether you're getting suppliers down the street versus, across the world and having to put stuff on a boat. So your inventory cash flow, just the timing, can be very different. And you need to learn that pattern so that you can start to see how the dollars are building up in that account. Are there going to be enough there for when I have to make that deposit or pay the final payment for my merchandise? So that's what Parkinson's Law is all about. Is just helping you see really the human condition of, we use what we have. And so if we can understand better what the purposes are for things, we can put that Parkinson's Law to work for us.
I like it. Now, guys, if you want to find out more information about some of these things that we've been talking about, her module, she's got 2 of them where we go in depth into some of these strategies she's referring to in week 3 of Freedom Ticket 3.0. So make sure to go check that out, any of you Helium 10 members out there. Now, just in general, you actually have your own accounting firm, if I'm not mistaken, or a bookkeeping firm, and you deal with a lot of Amazon sellers. And what I'm curious about is, I'm sure you have new clients come on to you as Amazon sellers, but maybe they were handling their own bookkeeping before, or maybe they were having just a general bookkeeper, handle their stuff. What is some of the biggest mistakes that you've seen, like when you start opening up and like, well, you've been doing that, or they were doing what? Like, what are some of those like eyebrow raising things that you've seen when you bring on somebody who maybe hasn't used somebody like yourself who actually knows about Amazon?
Well, first of all, I think a big mistake is people record just the deposits that they get in. So if you get a deposit from Amazon, they've already taken about a third of it, right? So they've taken that money out on your behalf and managed gift wrapping and shipping and whatever else. But that's invisible. Many accountants will just record the deposit rather than record the total revenue sales that you had and then back out all those expenses. And the reason that's an issue is because Amazon's going to file a 1099 for you, and you want your books to kind of match what Amazon has sent in on your behalf. So if you're showing just the deposits coming in and not the whole transaction of total revenues, you can imagine if Amazon is filing a report on your behalf that shows you sold $1 million, but you're filing something that said, no, my revenues were only 700,000. You're raising some red flags. People are going to say, what's this difference? Yeah, you can explain it, but you don't want to have to. Plus, the problem with that for you as a seller, as a business owner, is you don't have good visibility into what your gross margin is. Really, every business owner, their first metric ought to be, what's your gross margin? And Amazon fees as a percent of, Amazon sales, along with your cost of goods and other aspects of cost of goods, you've got to really analyze that to understand what your gross margin is. And gross margin is the thing that's looking at that on a regular basis will tell you when something's going wrong, when fees may be out of whack. We've looked at it for some clients who, for some reason, their weights got off and all of a sudden their fees went way out of whack. And,
you know why? Because they're not using Helium 10 alerts, which tells you when that changed. I mean, that literally happened to me. It was so funny because I obviously work here at Helium 10, and it's that's why this is so embarrassing. There was this clip I have where the original Project X case study that we did, where I was showing people how to set up alerts, and it was so funny. I mean, we do everything live, like we record stuff live. We don't like practice it and stuff. Like we just want things to be genuine, right? So there's actually a clip in Project X where you can see me and Tim Jordan going over Helium 10 alerts, and then I'm like, wow, look at this coffin shelf. It looks like on this date, Amazon changed my dimensions. And at that time, it was like 2 weeks after it happened. I just happened to catch it. I was like, man, I got to go check on this. But what happened was I never checked it. And like a year later, I went back and I was trying to do some audits. I'm like, it doesn't seem like there's as much profit as there should be on this. And what happened was I never went and called Amazon on their mistake. It was erroneous. So sometimes Amazon changes dimensions. Like if you flubbed up on if you're doing something wrong where you're saying your product is smaller than it should be, yeah, Amazon's going to correct you. But sometimes Amazon just measures it funny. And in this case, these 2 inches resulted in like $2 per unit of extra charge or something like that. And when I calculated, it was like $5,000 over 8 months. We got charged extra for this one product. Now I went back in and I got a lot of that back, but not everything, because Amazon doesn't refund you. You only have a window. Like you can't just say, oh yeah, in 2018, you guys overcharged me. They're like, too bad, statute of limitations. Yeah, they
narrowed that down recently.
Yeah. But guys, that's very accurate that, first of all, make sure you have Helium 10 alerts installed so that you know if Amazon changes. But when we're talking profits and we're talking your bottom line, 1 inch or 2 inches here or there can really have a huge effect, especially when you expand it out over a year.
Yeah, and just like you had an alert, you had an opportunity to see it happening, but you're busy. Everybody's busy. It escapes your mind. But if you look at your financial statements, there's another jog where you can go, oh, wait a second, this is off, and I think I know why. It's just another data point to tell you, hey, I better look at this. So that's something that I see people doing, that if you put that data in your financial system, it can go to work for you so you can truly understand your profitability.
Excellent. All right. So what else, any horror stories that you can, we don't want to scare people out there, But hey, sometimes you need to be a little bit scared about what could happen if you're not doing things the right way. So anything, you don't have to give clients names or anything like that, or what
Oh
their
yeah,
product
yeah.
was, but
That'd be
anything that can give a little shock and awe effect here on why people need to really be careful about some things in the accounting world.
Let me tell you a happy story from Profit First that could have gone the other way. In fact, it did go the other way for a bunch of people. Back last, was it March timeframe, 2020 March? Um, Amazon was announcing that they were only going to accept essential items, right? I mean, remember the panic that we all were feeling like, okay, what is fixing to happen? I was feeling it for my clients and wondering how are they going to make it. And I got a ton of email from our clients. We have about 150 clients, and I was getting a ton of email. And we went out with a offer to help forecast cash flow for them for the next few months, because we knew their whole world had been disrupted. So we went out with that email, and I got these kinds of email back. One was, "Oh, we're good. I've got Profit First set up. I've got plenty of inventory funds set aside that since I won't be buying inventory, I can reprogram. We got my staff covered. We're good. Thank you so much for Profit First." Then I got these other emails back that were like, "Oh, please help us. We don't know what we're going to do. We don't know how we're going to pay Amex next week, and we're struggling." And so, the pandemic really did make it clear to me how Profit First was benefiting our clients. We knew it because we knew they were taking vacations. I would get a note from people saying, "I paid my mortgage off." That kind of stuff is really cool. But when the pandemic hit and people didn't know what was going to happen next, it was so nice to get these notes saying, "Thank you, we're good."
Okay, I like it. Now, here's a question. I think in the traditional sense, accounting is nothing new. Obviously, it's been around for thousands of years. But when you think nowadays about just, hey, I need a personal accountant. I'm already past the stage where I'm using, what are those websites that TurboTax or something like that, right? Is people usually like having somebody local, like an office, like, hey, I'm going to go into the office and let's look at our books together and this and that. But if we're saying, hey, you probably should consider somebody with experience in Amazon, chances are you're not going to find somebody local who is an expert on Amazon seller. So what would you say to those people? It's like, hey, man, I really love being able to just like sit across the table from my accountant and go over things, but I have nobody around here who's an Amazon seller specialist. How is it okay that I can, let's say I'm in California, you're in Arkansas. Let's say I made you my Amazon accountant. We don't even have a face-to-face meeting. Like, what do you say to people who might be skeptical or worried about that kind of thing?
Well, it's interesting to me. My clients are all over the world, and I've not met most of them. Very few of them I've met because we happen to be at a conference together. Our clients' business is all on computers, all dealing with people they have no relationship with. Ordering supplies from India or China, where you never get to walk into the factory and sit down in the conference room or, watch it being made. Those things just don't happen hardly at all. Few people get that opportunity, but it's a very few. So the technology has just made it so that we can have visibility and access to everything we need without having to waste your valuable time. Our whole approach is we try to do it in the background for you so that you don't have to spend your time thinking about it. And for those people that want an in-person relationship, I totally get that. And there may be in a larger metropolitan area you could find someone, but in a small area like where I work, there's just not that kind of specialty. So uh, Zoom calls and just having the confidence that somebody has your back allows you to have that peace of mind without actually having the face-to-face relationship.
Yeah, makes sense. Now, what are some strategies now that, again, somebody who has been selling on Amazon for a couple of years but they come to you? What are some easy wins out there for some Amazon sellers that you'd probably say that more than half of the people maybe don't even know about, or maybe they aren't doing?
I think on the profitability side of things, where I see people struggling, is they really they're not examining their gross margin at the product level, or they did once and then they set it and then they never go back and revisit it. And over time, costs have changed, their price has changed, their shipping has changed. And when we work with our clients, one of the biggest challenges is getting their cost of goods sold recorded correctly, because the assumptions that they made once, as we apply that over a year or two's time, they're just not making sense anymore. And we have to dig in and go, okay, there's something going on with either the way you've costed things. And it's really interesting, because you could have, 100 different products, and 90% of them by count are costed correct. But say the top 10 are costed incorrectly, but they're your big sellers. That can throw everything off from a profitability standpoint. So doing some analysis about profitability on your top sellers, on your low sellers, that kind of profitability analysis has to be done, a couple of times a year, to ensure that those factors that change on a regular basis are not causing your profitability to just go off the rails.
Okay. And then is this done? Is it best to do this at the marketplace level as well? Like, for example, back in the day, a good 95% of Amazon sellers, hey, I sell on Amazon USA, one and done. Now, especially in the last 2 years, people are like, oh, shoot, I can't have all my eggs in one basket here. I need to start selling on Amazon Canada. I need to start selling on Walmart. I need to have my Shopify. I need to go to Amazon Europe. So when you're considering bookkeeping, do you suggest doing it at the actual SKU level, which necessarily might be just this, I have this one coffin shelf and I'm selling the same exact product everywhere. What's my overall, profitability? Or do I need to be doing it per marketplace?
You need to be doing it per marketplace, because while it's really, I get the want and desire to diversify, but it's a huge distraction to your time and energy to try to get those different international marketplaces spun up, and to make sure you're taking care of all the customs requirements and the VAT tax requirements, et cetera. So you need to understand, are those various marketplaces really profitable for you, for the amount of attention and aggravation that they cause? The more simple you can make your business, the more profitable you're going to be. I know you have to weigh that as a trade-off against having all your eggs in one basket, but don't have multiple baskets of little bitty things that are never bringing you a return. That's a bad investment.
Some other strategies or tips. We have this thing that we always say, a 30-second tip. That's a little feature that we have of this show, but you can take longer than 30 seconds, but maybe some quick hitters of do's and don'ts in the bookkeeping world for Amazon, Walmart, e-commerce sellers out there.
From a cash flow perspective, a do is to make sure you're setting aside replenishment inventory dollars so that you don't get caught up in having to borrow money for your inventory. Many of our clients, they don't have enough margin to also then have to pay interest on their product. Let's see, don'ts. Don't take your eye off the ball with regard to your operating expenses. Operating expenses can totally deplete anything that you would put in your pocket. So, keep your eye on the ball, keep those operating expenses low. There's a ton of resources out there for you that you can get, like on YouTube, like with your Project X, with podcasts like you're doing. There's so much out there. Don't just be throwing money away at trying to get the latest education. I see it all the time, and I have a course too, but you really want to be sure that you're getting a return out of that. It's a time suck, and you really need to ensure that that you're going with something that's reputable and it's going to pay off for you. Operating expenses, people just don't pay attention, and then they have no money left.
In general, like I've had my aunt is an accountant, and I have like personal people I've always used and stuff. So I'm not really sure how things operate out there, but agency or firms like yourself, how does it work? Like, am I paying like this retainer fee, or am I only paying when you guys do, some quarterly audits, or does it depend on the size of how many SKUs how do I go about hiring someone like yourself? How does that work?
Well, the way we work in our firm, we try to handle the back office accounting for you so that you don't have to do a lot of it, right? So we look at the activity level that you have. How many channels are you selling on? How many transactions are coming into how many bank accounts? Because that's the work that we have to do. We have to make sure that those transactions get coded to the proper place, and that that we reconcile those accounts. How many loans do you have? So for us, it's a custom quote based on the activity in your business. And then we charge that on a monthly basis. And that's the fee you have for us serving your back office for doing your accounting. And our process is to handle all those transactions that come to your bank account, get them in the right place, make sure they're reconciled, make sure your inventory, cost of goods sold makes sense for the month, then generate financial statements for you at the beginning of the next month, so you know how you did. And for the most part, our clients, unless they've got things that are changing up a lot, we send them an email once a week with a list of questions. We saw these 4 things. We're not sure what to do with them. You give us some information, we plug it in, and then we're able to generate financial statements. So that's how it works in our firm. If you're hiring somebody to file your sales tax or to file other aspects, pay your bills, do your payroll, which we do those kinds of things as well. They get a little bit more complicated, but for the most part, we price that out. This is what it's going to take to serve you for the month. We bill you that on a monthly basis.
Okay. I know you can't give an exact quote here, but I just want people to understand if they're being ripped off or what they can expect if they want to go this route. Let me just give you our Project X account. We've got 4 or 5 products in there. We're grossing, I don't know, like $200,000 a year on it. We pay all our bills, and we handle all the bank transactions and paying credit card bills and all that stuff. But if our we want to start thinking about exiting this business, so I know I have to get our bookkeeping. Literally, we're not doing much bookkeeping at all outside of what's necessary for tax purposes and things. So I need to hire somebody like yourself or a company like yourself to, hey, look, can you please handle our books so that once we do want to exit, we need to have this available. So is this like, hey, this is going to cost $1,000 a month. This is going to cost $500 to $1,000 a month. This costs $50 to $100 a month. Like, what's the rough estimate of how much I would be looking at?
For our firm, we have a minimum of $400 a month, because for us to go in and touch the account a couple of times a week to just be sure that we are doing everything right, communicate with you, it's a minimum of $400. Our average is in the neighborhood of $800 a month. I do have clients that are paying over $5,000 a month. So it really depends on how complex, how much you want us to do, how much volume of activity you have. But for somebody that's started out, got a little bit of history, wanting to get this off their plate, a minimum investment of $400 a month. And then as the business grows, because here's the trade-off: you're not having to worry about this much anymore, and you're getting things set up in a way you've got good data, right? And you're setting yourself up for an exit. Then you're going to have time to really focus on the business. And the idea is you grow the business. As your business grows, we reevaluate it if it becomes a material change over time. And our hope, and this is what happens with our clients, they grow. Our fees have to grow, over time as well. But it's because they're able to do great things in their business.
Okay, excellent. All right. Well, Cyndi, thank you so much for joining us today. And like I said to everybody out there, definitely go back into Freedom Ticket to take a look at these two modules to find out how you can put profit first. But if somebody wants to reach out to you to ask for more questions on this subject, or possibly to even procure your services, how can they find you on the interwebs out there?
Okay, we're under Bookskeep, BOOKSKEEP.com, and my email is Cyndi, CYNDI @bookskeep.com. So I'd love to hear from people.
Awesome. All right, thank you again for coming on, Cyndi, and we'll be definitely keeping in contact in the future.
All right. Thank you, Bradley. Appreciate you.